JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 5th of August 2020. So yep, welcome everyone. Welcome to this Wednesday morning session where we're gonna have a quick look at the markets, review the charts, the usual stuff. But yeah, before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. So, okay guys, now then, just before we jump into the charts, as usual, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Also, quick update before we jump into the charts. Quick update on what's happening here globally. So, yeah, well, as we understand, the figure continues to rise. However, yesterday, although it seems that this source is not showing that, but yesterday we did have another surge. It didn't really hit the new all-time high or something, but a daily high, I mean, but still it kind of went higher here. So yeah, that's the situation. We'll keep an eye on the indices. And speaking of indices, let's jump into the German DAX here. So yesterday the index closed slightly in the red. It failed to move above this barrier. I talked about this index, and it failed to move above the 12,773 territory. So basically, this kind of raised a bit of concerns for the buyers. However, probably on the more positive side, the fact that the index managed to remain above above this downside line taken from the high of the 23rd of July, this kind of still gives a bit of hope for the buyers that this index could reverse to the upside. However, still, as I've mentioned before, we would prefer to wait for a push above this 12,773 territory first before examining some slightly higher areas. Looking at the cash index is right now trying to make its way up again. It is currently balancing near the 12,650 territory, so basically slightly above the yesterday's close. So like I said, we'll continue monitoring this, but and as long as it stays in this little territory here, we'll remain neutral. But if it makes its way back above the 12,773 territory, then yes, we'll aim for some higher levels again. In order to aim for some downside here, well, we'll take a very conservative approach and probably wait for a drop below the 12,254 territory first before, let's say, aiming for lower areas. But even then, as I mentioned to you yesterday, initially we'll target this little territory right here, the area around the 100-day EMA, the 200-day EMA, and this support zone near the 11,957 zone, marked by the low of the 5th of June. But again, we'll consider this scenario if we get a move back below this downside line and a drop below the 12,254 mark. Now jumping into Nikkei, Nikkei is closed already, but yep, it gained a little, well, and on the contrary, it declined a little bit. However, it managed to remain above the 21-day EMA. I talked about this one yesterday, so basically this kind of still gives a bit of hope for the buyers, and we could see this one maybe pushing towards this downside resistance line taken from the high of the 10th of June. So in a way, it could get a hold up somewhere around here initially, but if that fails to provide resistance and breaks, then of course we'll keep on monitoring the 22,965 territory here, marked by the high of the 15th of July, or in other words, the highest point of July. And of course, we need to see a break above that in order to get a little bit more comfortable with higher levels. Of course, don't get me wrong, the more comfortable kind of area after a break of which would for us would be from around 23,185-86 zone, which is the highest point of June. But like I said, we'll start considering higher levels if we get a push above this July high first. But in the meantime, in the short run, let's keep an eye on this 21-day EMA, which continues to provide support, and this downside line. Let's see if this downside line is able to kind of stop the acceleration. But now jumping into Shanghai Composite, this one is fractionally in the green. However, it was initially in the red, but it's kind of working out nicely here with the idea that I've mentioned before. So if what I was saying, that if this barrier here, if the 3,336 territory breaks, then yes, of course, this could open the door towards higher levels. You can see that it went higher, but now kind of declined today a little bit, corrected a little bit lower. However, this 3,336 territory continues to act as an important level. If previously it was seen as resistance, now it's taking the role of support again, because as you can see, it did the same thing here in the beginning of July. So yep, as long as the price remains above this barrier, above this area, then yes, there is still a good possibility for this one to drift higher and maybe test the highest point of July near the 3,457 zone. So keep your eyes on that one. So well, gold, the main one that kind of took the spotlight yesterday. Not only that it reached the psychological 2000 mark, but it also overshot it and continued to rally. And this morning, for example, the commodity managed to reach the 2031 mark, where it found resistance and kind of started correcting a little bit lower. Now, of course, don't get me wrong, for now everything's kind of working according to plan. Yesterday, this is what I was talking about, that if we get a push above the previous high here, then yes, of course, this would confirm a forthcoming higher high, and maybe we could see gold kind of pushing further north. So this is what exactly what happened. Now we'll take the same approach, because again, above the 2031 zone, we don't really have anything in there. So that's why we would prefer, in order to aim for some higher levels, we would prefer to wait for a break above that area first. I'm not saying, I mean, of course, at some point this will have to correct lower. However, for now, it seems that it's not the case. The US dollar, which I'll get to in a little bit, the US dollar is kind of, let's say, is declining a little bit right now, so that's why it's a little bit tricky here to kind of try and to find a good potential resistance level from where the commodity could go for a bit of a correction. So that's why for now, guys, we'll be, like I said, we'll be very careful here with the upside. Like I said, we will wait for a push above the 2031 zone in order to aim for some higher levels. But in case this suddenly starts reversing lower, then yep, keep your eyes on some of these highs, which now could be taking the role of support. So one of which maybe you could keep an eye on is the 1981 zone right here. So basically a drop below this area could in a way open the door towards lower levels. Of course, keep your eyes on the psychological 2000 zone as well. If the price starts falling below it, maybe we could start considering lower levels from there. However, like I said, maybe a slightly better level could come from around on a break of the 1981 zone here, and yep, we could see maybe that slightly larger correction to the downside. Now Brent oil. So Brent oil yesterday, well, in general, oil has popped higher a little bit, mainly, or it could be due to the the kind of the explosion that we had in Beirut in Lebanon. So yep, here you can see that oil has jumped, not significantly, of course. It still remains below the 200-day EMA. So in other words, from the technical side, you can see that the commodity is really getting into a very tight squeeze. It's trading below this 200-day EMA and above this 21-day EMA, which and kind of both of those are now kind of getting very close to each other, this way squeezing the price here. So we'll see how this is going to perform, but again, as I've mentioned before to you, certain breakouts, certain levels that we're keeping an eye on, we need to see a break of one of those. So basically, in order to aim for some higher levels, a push above the 45.20 zone here, marked by the low of the 6th of March, would be required. In addition to that, a push above the 200-day EMA could do the trick for more buyers. In terms of the downside here, well, I mean, you could start looking at some lower levels if the commodity starts pushing below the 42.38 zone, roughly around here, somewhere here, and at the same time, this would place the price below the 21-day EMA as well, and yep, maybe we could see this one drifting a little bit further south. But again, for now, it's kind of trying, it seems that it's trying to make its way higher. However, and we need to see a break of this 200-day EMA first. Now DXY, this is what I was talking about earlier on, and yesterday and on Monday I was also kind of mentioning this, that if the 93.81 zone continues to provide resistance, then, well, I mean, we could see this one pushing maybe back down, and this is what exactly what's happening. So although on Monday we did have an overshoot here, but didn't really close a daily candle. Yesterday it had an attempt to move above it, but still, as you can see, this is what happened. It drifted back down. We'll remain careful here. I'm not saying that this is where it could start moving lower, because here, for example, it could end up the day here right unchanged and basically forming a possible kind of doji here, and which could be seen as a potential reversal sign here, and we could see this one reversing and pushing to the upside again. But again, to be on the safe side, we would prefer to wait for a push above the 93.81 zone. Just a quick reminder, that level is the lowest point of September of 2018. So nice good pop above it, a nice good daily close above it could open the door towards slightly higher levels. Initially, I'm going to be aiming for the 94.65 level, and to be honest, this looks like a very good area of potential resistance, initial resistance, because that's the, first of all, the low of March of this year, then and second, that the 21-day EMA is now approaching this level, so it could be coinciding here. And basically, as we know here, as we saw in the past, I mean, it did sometimes act as a good resistance level, and to be honest, why not to kind of provide all that resistance near this level, near the 94.65. But again, in order to aim for that area, we need to see a push above this 93.81 zone first. In terms of the downside, pretty straightforward. I'll wait for a drop below July's low here at 98.55 and sorry, 92.55, and then aim for some lower levels, because to be honest, we had already a decent decline here, so maybe at some point we could see that correction. But if it doesn't want to go for a correction, it could, yes, of course, logically could move lower, but just to be, like I said, on the safe side, a break below this 92.55 zone could do the trick for more sellers, as this would confirm a forthcoming lower low. Quick update on Ripple. Not much is happening here, but still the same game plan remains. As I've mentioned to you yesterday, basically we need to see a pop above the 0.3262 level in order to get comfortable with higher levels, because such a move would confirm a forthcoming higher high. However, we're not going to drive this one way too much to the upside, because we will aim only for the 0.3464 level first, which is marked by the highest point of this year, the current highest point of this year. So let's see if this statement actually will be correct. So, but like I said, wait for that push above the last week's high first. In terms of the downside, a drop below the 0.2858 zone here could do the trick for more sellers, and we could see this one correcting even further south. Now jumping into Aud Cad, now the pair here, I've looked at this one kind of a while ago, but here you can see that the pair is trading still above this upside support line taken from the, it's not trading anymore above this upside support line taken from the low the 22nd of June. So it managed to break it, and well, I mean, here the situation is a little bit on the difficult side because basically, yes, it broke this upside line, could be a signal of a potential move lower. However, it still balances above the 21-day EMA, which, as you can see, in the past acted as a very nice area of support. So that's why we would need to see a break of a drop below this 21-day EMA first, shown as the yellow line, and then we could aim for some lower levels, especially if the rate falls also below the current lowest point of this week, which is roughly around the 0.9506 zone. So a drop below this could, yep, open the door towards further declines. We could then aim for something like here, near the 0.9272 territory, and then, yeah, we'll, like I said, we'll take it from there, because, by the way, this area also coincides with the 100-day EMA. So again, perfect target. But like I said before, considering this idea, we need to kind of wait for a drop below this. I mean, today we got some data, we got some services PMIs from Australia. I mean, those came out slightly worse than the forecast, at 58.2, and the forecast was around 58.5. However, it's a much better number than the previous figure, which was at 53.1. So in a way, this is the problem here that we're seeing. This is where the traders are undecided of what to do with this pair right now. On one hand, we do have the slightly strengthening Canadian dollar, which is also getting a boost from the oil prices here from oil kind of moving a little bit higher. On the other hand, still the whole risk-on environment is helping in the Australian dollar. So that's why for now probably we'll just, like I said, wait this one out, and if we do see a drop below the 0.9506 level, then yes, we will aim for some slightly lower levels. NZD-JPY also something to kind of keep in mind, and although it's really moving nowhere today, we did get some data this morning from New Zealand, so their jobs numbers, so unemployment has improved. Well, it kind of really beat the forecast so coming out at 4%, beating the forecast of 5.8. So that's of course a great result. The employment change was also on the higher side, so minus 0.4 against the forecasted minus 2%. So to be honest, it looks like that the forecast might have been maybe a little bit on the too pessimistic side. So it wasn't really a huge maybe issue for them, for the numbers to beat those forecasts. So of course that's just a bit of speculation, but let's see. Yeah, this is probably why we're not seeing a huge jump in New Zealand dollar here. Of course, for now we'll keep on monitoring this. The interesting bit here, if you do like to trade this this pair, I mean, yes, we've managed to break this upside line. It's currently trading around the 21-day EMA, so in a way everything's kind of a little bit leading towards the downside. Even if it drops lower here, of course, first of all, we'll keep a close eye on the 200-day EMA here, shown as the black line, and the 100-day EMA shown as the green line, which could provide a bit of support. If the pair overshoots these two lines, then the last resort for the bulls to come in could be somewhere near the 68.08 level here, which, as you can see, acted as a good area of resistance previously, and now then in the end of June it acted as a good support. So, but then the interesting part would be that would this would this level be the lower side of a potential range here? Again, it's a little bit of a difficult one. For now, we cannot really talk about the idea of a range until we actually see a stronger move to the downside here, and maybe not maybe, but a test of this 68.08 level. And if it does provide support, a nice rebound, yep, could confirm that this pair right now is ranging. But if this pushes higher and the pair starts pushing above the 71.67 territory here, then yes, this is where it could open the door towards some slightly higher levels, because such a move would confirm a forthcoming higher high, and potentially more buyers could be joining it. But again, like I said, for now, it's a very interesting one. It's very interesting to see what it's going to form here. So yeah, keep your eyes on this one. USD CAD, now this one is pushing lower, and of course the weaker dollar, US dollar, and the kind of slightly strengthening Canadian dollar, this is the result that we're getting right now, and the pair is moving lower. It's breaking the 1.1314 zone here that I talked about previously, and of course the big question here is, will it stay below it? If it stays below this, then yes, of course the next target for us is the 1.32 mark here, which is the low of the 21st of February, and then of course we'll take it from there. But like I said, let's not get ahead of ourselves too much. First, let's see if this if this daily candle stays below this 1.3314. For now, everything's looking a little bit more bearish than bullish, so let's continue monitoring the situation here. GBP USD. So this is what I talked about in the beginning of this week. So the 1.3035 level continues to provide support. That's marked by the inside swing low of the 9th of March. So basically everything's kind of working out according to the idea that I've mentioned in the beginning of this week and Monday, and then same story, I mentioned it on Tuesday, yesterday. So for now, it seems that this level here continues to provide decent support, although we keep getting overshoots, but we don't get a daily close below it. So all this is still creating this atmosphere of potential kind of reversal to the upside here. Of course, let's see if that happens. Initially, we'll target the 1.32 mark here, which is the highest point of March, and if that gets broken, then of course, yes, it could open, the break here could open the door towards further acceleration to the upside. If the pair, and we see that its daily candle ending the day below the 1.3035 zone, then yes, we will aim for a bit of a larger correction to the downside. So kind of keep your eyes on that one, guys. And finally, Euro USD. So here the pair, as you can see, this level here, the one that I kept mentioning from the beginning of this week, the 1.1725 continues to provide decent support. That's also the inside swing low here of the 24th of September 2018. Of course, all this is looking quite positive here right now. The slightly weakening dollar is also helping this pair to move higher. But what I was saying previously, that a push above the 1.1815 level would be required first in order to kind of aim again to the upside. That's, by the way, the highest point of September 2018. So good potential level to watch out for. But yeah, we need a break of that barrier first before we could aim for slightly higher levels, where we could aim initially for the high of last week near the 1.190809 zone. But again, like I said, we'll take it from there. First, let's see how it's going to perform near this 1.1815 level. So guys, I really hope you found it useful, and yep, thank you very much for joining in. Keep your eyes on the economic calendar today, guys. We do have a bit of an eventful day, mainly with the services PMIs coming out from the European Union, and from the European countries, and from the US later on. So we do have also the ISM non-manufacturing PMI figures from the US, but also something that traders will be watching will be that ADP non-farm employment change number. So some like to try and predict by looking at the ADP number, trying to predict the NFP number on Friday. But to be honest, like I said, be very careful with that, because they lately they have not been really, let's say, that much in line. So so yeah, once again guys, thank you very much for watching and listening. I really appreciate you joining in. So have a wonderful trading day, and I'll see you later at my traders tea time, 13:15 GMT. Thank you very much, and bye bye.